In this video, I've got two of the primary examples for a signal in the price chart. And almost always when the three price lines are running together, green is on top, red in the middle, blue at the bottom. When the red and green rise above the blue significantly and just run high, with the blue at the bottom, or much lower. Sometimes it's 90 to 100 points lower. The blue is lower than the red and the green. Then you're in an uptrend. The two primary signals are when when price red drops below the blue line. It's typically on a spike down, or it can be on even a low angle down for several days. But when the red crosses below the blue, that's a signal for the start of next day up or more. Also, when the red, for example, I think it's probably best if I just turn to the chart right here and help you can when you see it, it's quicker to identify it. I'm in Facebook here, and this is in March of 2017 on the green line, and the pink line is in April of 2017. And on the green vertical line, we have a spike down. We have blue at 9, red at 1097, so it's almost 11. So it's 9, 11, and 26. If you take price red, the basic idea is to have the red and the green closer together than, I said that wrong, to have the red and the blue closer together, and then the green is much higher. When you have that situation, and it can be, it's just, you just like to see the two closer together than the difference between the blue and the red versus the red and the green. In this case, you take price red times 2, which is, we almost got 11, so 11 times 2 is 22, and 22 is less than 26. That's a good indication for a price up next day. So those are the two formulas. When red times 2 is less than the green, it's a good chance that it's going to be a price up next day. Or when the red is under the blue, there's a good chance that it's going to be a price up next day. Now, let's take a look at some of these other lines, because I've got a few different charts that I'm going through so that this becomes clear, or more clear than what I've just described so far. On the pink vertical line, we have price red at 6, blue at 7, and green at 11. So this qualifies as a red lowest condition, which would be the start of a next day up or more. If you back up the pink line one day, you have red, and you can see it over here. You have blue 8, red 9, and green 14. So now in this case here, blue is under the red. On the pink vertical line right here, the blue is lowest. And so that's not if you're just using the price chart, that's not a signal. Whereas this next day you have that signal on the with the price red being the lowest. Now, with those two examples, I want to also point out that there is something that's down here that is important, and that is, if you look back here at the last, where my white line is, there's 1, 2, 3, 4, 5 days back, Pink and Swing Pink and Swing Zion were fairly close together. but that's when divergence started. And now, 5 days later, on the pink vertical line, you find that swing pink has gone up and swing Zion has gone down. And you've heard me tell you that, hopefully on other videos, that swing pink is one of the leading indicators. It tells us what's going to happen in the marketplace, along with zip red and many of the zip lines. But zip red, zip gray, and swing pink are the three fastest lines, and those three are obviously leading indicators. Now, that being said, I'll also point out one thing here that gives us another signal, I'll just say contributing factor. Over here on the green line, we have the trend gray is lowest. And if you've heard me say anything about that before, when you have a strong movement down, you like to see, I mean, it can happen without a strong movement down, but we do like to see strong movements down. And when we do, we have in this case, we have trend gray at -10, red is at -7, and the green is at it's at -0.7. So we have all three of the fast trend lines underneath the blue, the trend trio, and in this case even under the zero. And so when that happens, when trend gray is lowest, that is a signal for a next day up. So that is an example of when things can move up. You also have down here in the power chart, you have power yellow down touching the orange, power orange line, which is interesting. The other thing I'll point out is that you have a power pink line down touching the zero line. Now, that is the same situation you have over here on this day, that when power pink is down touching zero. But what happens? We have, in this case, we have more influence from the power yellow line. If you recall from previous videos, if you've seen it, we call them the twin yellow lines. It's zip yellow and power yellow. When those two are highest and running down, you're in a downtrend. When those two are both lowest and running up, you're in an uptrend. And they have a lot of influence on different situations. And now the key thing here is that power yellow has crossed under power orange and green, or maybe not quite green yet, but in this case we have when the power lines, or for that matter when any indicator lines cross under zero or cross under the wide line in that chart, in this case here, yellow is crossing under orange and green. They typically run closer together than like on your trio lines. That's not necessarily true as much because they're separated a lot more. But it is reasonably true on the swing chart as well. When your lines cross under your swing red or your swing green or the zero line, it has a tendency not to go back up. And of course on the pink line over here, we're in a situation where we have the gray line has down touched the green line. The trend red is just about ready to cross over the green line, and you know that when red crosses over the green line, it's the start of an uptrend, because red and green are two parallel lines that when red is above green, you're going up on an uptrend, and when red is under green, you're going down in a downtrend. Now, I'll show you one other, the other thing I'll point out in this example is we like to see we like to see strong zip red movements. For example, on this day right here, the day before the green vertical line, we have we have zip red at 63, and the day before it was down, and it was at 21. So it went from 21 to 63, and then on the green vertical line day, zip red was 2. So zip red dropped 61 points in one day. That's what we refer to as a spike. Whenever it reaches, pretty much reaches 40 points, or we have ranges that we talk about in the zip red line, and that is in the range of 50, in the range of 70, and in the range of 85 to 95. And typically, when it's in those lower ranges, it bounces, it reverses, especially in that 50 range. And when it goes up like from 2 to 95, the fact that it's above 95, what happens is the zip red will go down the next day, but the price will be even or up the next day. And then zip red will bounce around up there, and then zip pink will come up and get close to the green, and then you've got a pink-green top. All right, now let me go on to another example. In this example here, I have a pink line. The symbol is YY, and what has happened here is this is the day before the bottom of the cycle. And I put it here specifically to point out a few different things. Number one, on the pink vertical line day, price red is at 7.3, blue is at 7.7, and green is at 14.5. So red is the lowest at 7.3. So this is a low. This should be the bottom of a cycle, right? This qualifies as in your green, in your red times 2, it's only 14.6, and green is at 14.5. That's close enough to qualify. Price red is also at in the lowest position, so that qualifies for a next day up. So when you look at this pink line, it qualifies when you just look at the price chart. Both of those normal next day up patterns are here in this example. However, if you look at if we bought the close on this day, it's 43.89. If we bought and the next day it closed at 43.76. So a $43 stock went down 13 cents. That's meaningless in the big picture of things. So the fact that we missed it, if you didn't see the other signals, the fact that we missed it doesn't hurt us anything, or it hurts us 13 cents. All right, but key things that are occurring right now are, for example, are down here in the power chart. On this pink line vertical day, we have Zip Zion highest. Zip Zion highest means that next day it's going to go down. However, there's two things that I want to point out to you. Zip Zion is highest, and Zip Zion is at 29. And so with Zip Zion at 29 and being highest, it can't go a whole lot lower. And obviously, the lines buried it. It didn't go lower. It actually went up. However, the next day after the pink vertical line, the candle had a long lower red tail, or lower tail, excuse me. And so that tells us that in this particular situation, that the lines, not necessarily the Zip Zion line, but the other faster moving lines could have been down at some point before they came back with the long lower tail that ended up being created by the end of the day. That becomes important when you're looking at the day to the right. And when you look at the day to the right, I'm going to move. Before I do that, let me keep this, or no, let me just move that over and I'll explain a couple of other things. I'm now have the vertical lines on the lowest, the very bottom. This is the day when things would tell us that signals are going to tell us that things are going to go up. And we see many things on this day. And going back to the price chart, price green or price red is at 5, blue is at 6.99, so let's say it's at 7. And so we got 5, 7, and 12. Green is at 12. Red is lowest. This is the lowest day on the chart. And just like here, back over here, price red was lowest as well. Okay, but now it's significantly better by 2 points. And that's kind of like where we like to see it. One of the key things that we have spotted down here is, and if you haven't picked it up on another video, is that the zip yellow and blue are now going up, and the pink is down low. Now remember, on a pink green bottom, just like over here, we see whenever the pink, typically when the pink is next to the green, then that's the qualifying factor for the pink green bottom to go up. That doesn't mean it's going to go up, but it's the qualifying factor for it. We typically, when we see zip pink at under 1, and obviously zip green is running at 0 for several days, then we'll see some other signal that'll tell us it's going up. When, like on this day here, when zip green hit 0, zip pink was at 19. And so that's it definitely qualifies, but there's just too much room to go down there in the next few days that we wouldn't think that that's the signal, that's the point of a signal for going up next day on a pink green bottom setup. Now, also on the pink vertical line day, the pink line has been lowest every day for about 4 days, and when that happens, it's just the price line. Zip pink is a price line, along with swing Zion and the 3 price lines in the price chart. So you have 5 price barometers. If you look back here again, we see that zip Zion, being the price barometer, is just going down, 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 down till it hits the bottom, and then it goes up. But on the day before this pink vertical line right here, I've told you that the swing pink is one of the fastest moving lines. It has already started going up, as well as the yellow. Now both the yellow and the pink, when they're going up and the Zion is going down, you're in a divergent situation, because Zion moves with price, not with power, not with market force pressure or market force, the tiny market force powers that are read from the 22 market force indicators. So now we get to the pink vertical line day, and what do we have? We have 2 days of divergence in the zip yellow pink Zion lines. Yellow and pink are now up 2 days, and Zion is down 2 days. I've seen that go 3 and maybe occasionally to a 4th. It hardly ever goes past 3 divergent days, and then it just shoots up, either in a next day up or in an uptrend. And so that relationship that you have between those 3 lines, the swing yellow, pink, and blue, you need to understand that relationship. Just like the relationship between the zip green, the zip Zion, which is and the zip pink. Zip pink is the price barometer, and zip green and zip Zion are the buyers in and out of the market, with zip Zion being the grandfather. And and when zip Zion is at 100, when zip Zion is at 100, there are a lot of people coming into the market, a lot of people buying. When zip Zion's at 0, there are a lot of people leaving that stock. And so Zip Green is the real short-term, fast-moving, buyers in and out of the market, whereas the grandfather to that, the slow-moving, more power to get to the extremities, takes a lot of power for Zip Zion to be at 100 and to hold it. And if it's there 3, 4, 5, 6 days, you got a really strong movement. Same is true if it's on the bottom 3, 4, 5, 6 days. It's a lot of people are leaving the market and the price is dropping. All right, now that being said, we have on this I'm going to go back one day here. This pink vertical line right now is the day before the pink, the bottom of the cycle. When this happened, you also have the red crossing over the green, I believe. Let me double check this. Trend red with trend green. Trend red is at minus 26.1 and trend green is at minus 26.5. So the green is just a little bit lower and red has just crossed over the green by barely 0.4 tenths. That is the signal. That's the pickup signal for the start of the uptrend. When red crosses over green, because when red is running above green, you're in an uptrend in your parallel line formats or your considerations. That's one of the patterns that we, the power of the two yellow lines, power, zip yellow and power yellow, tell us a whole lot in the configuration of what's going to happen. Now, obviously, at this point, at the either days down here, when we look at the power yellow and the zip yellow, we can see that the power yellow is still, or excuse me, that the power yellow is down here, and actually power pink, which is the deep cycle indicator, is under it. So power yellow has not come out as being on the bottom of the cycle yet, but the zip yellow is trying to come out and has been, oh, excuse me, I hiccuped, and has been at the bottom for, I mean, look, it's been a long time. And remember again, when it's at the bottom and going up, it's in an uptrend. When both zip yellow and power yellow are both down, are both lowest and going up, you're in an uptrend. When they're both highest and going down, you're in a downtrend. Now, in this case here, zip yellow has been lowest for the last several days, but it has not been going up. Now, I should recant that. Over on this point here, it is obviously not, it is the last day that it was lowest and going down. After this, the 3 days before the pink vertical line, the zip pink was lowest. But it can look like it's lowest. One of the differences that I want to point out to you as well here, on the day before, each of these pink vertical lines are now on the candle the day before the real bottom of the cycle. If you look at your zip yellow and your zip blue, they are still going down. They're fast indicators, and when the start of the uptrend starts, you will typically see zip yellow and blue start up. And if you go over to this next day, even though the price zip pink is underneath and lowest, zip blue and zip yellow have started in that uptrend. Zip green is obviously not on the bottom. Now, the other thing that I want to point out over here that I forgot was on the day after this vertical pink line, you have the lowest line in the cycle, the lowest candle in the cycle. That line went down and touched the yellow band line, the low yellow band line. And keep in mind, yellow, pink, and Zion lines are Bollinger Band lines, and the wide gray lines are a channel line that we created. And if you look here, just in this example, right in this area here, the green candles are above the channel line, and they indicate a strength of power because they're above the line. Last couple of days up here, they still go up, but they're not above the line like they are back down here. And when you got movement like that each day, you know you're in a strength movement. You know you're in a longer term, or at least hopefully you're in a longer term. You obviously want to look at what's happening, and that being that you want to make sure that your trend lines are continuing up. They started up here about the day after this vertical pink line. The trio started up. Obviously red was above green the day after this significantly, and that was the actual start of the uptrend, you might say. But after that point, your trio, blue, pink, and yellow, continued to go up, crossed over zero, and then just continued to go up more and more. And so that gives you that down touch of that yellow. If you look over here, you got the same thing. Green has hit the yellow on the top yellow line, the Bollinger line, and that's an indication for it going down. We've got a red one over here. Let me look at this here. Yeah, same thing here. On the day before this long red candle, the big green candle with the huge upper tail hit the yellow line, and then the next day it went down. And in this case here, it went down one day, whereas in this case over here, it went down 6 or 8 days. And then same thing over here, when it hit the yellow, it bounced back up. That you'll see that happen a lot when you're watching different setups or different things. I've got a couple more things that I want to point out. Try to make it quick here. I am back on the same day I'm on a different setup, but I'm on the same green line candle day that I was before. But I've got two other examples that I want to show this to you. The green vertical line day here has a price. I got to move this data window just a little here. The price window is on the green vertical line day it has blue lowest at 9, the red is at almost 11, and the green is at 26. 11 times 2 is 22, so it's under the green, which makes it qualify as a turnaround up next day up situation. The pink line over here has the green, or I'll do the red at the blue at 11, the red at 16, and the green at 35. 16 times 2 on the red is 32. That's less than 35, and that again qualifies this as an up day, a next day up. Now, why didn't that one work? What's the difference between what we see here? Because the day after this pink vertical line, things went down. One of the key reasons on the vertical line is that you are in the middle of zip yellow and power yellow going down. Also, zip yellow has crossed, power yellow over here has crossed under the orange and green lines, and the other crossing point with indicators is the 0 line. It happens, it's much more powerful on the power chart and the swing chart and the zip chart. The zip obviously crosses 50, not the 0, than it is on the trend chart. The trend chart, when they cross over the indicator, the 3 trio lines, that doesn't make a difference. When the trio crosses under 0, that's what makes a difference on the trend chart. But so power yellow and has gone down. If you look back to the green vertical line over here, power yellow went down to the orange line and then bounced back up off of it, and so it never made it under the green line or the green and orange line. And so, and also green and orange are fairly high above the zero line. This is again Facebook, and right now the green is at 1.57 and the orange is at 1.75. And so and I bring that up because when the orange and green are separated from the zero by stronger distances, they would have the tendency, because they're separated above the zero a strong amount, it's going to be harder for things to go down. If you had orange above the green, but they were 0.07 points away from the zero line, that's an easy drop. You got to watch what's happening there. Now, one other thing that I want to point out that I started to mention, I'm not sure if I totally finished it, or this idea at least. I talked about in this case here, the day before the green line, the zip red was at 63. The next day it was at 2, so it dropped 63 points. We like to see those spike downs. And we kind of refer this to as a spike down when, like I mentioned, at 40 or 50 points down. But the difference is that you're in a TOC pattern. It went up and then it went down strongly. Whereas over here in this example, 3 days before the pink vertical line, zip red is at 80, and then 3 days later, zip red is at 10. So it went down 70 points in 3 days, but you're experiencing a simple downtrend. And so a simple downtrend is not going to have the power reaction of a strong indicator line length. If you haven't heard me mention it before, just in this video I've talked about zip red being up at 90 and it's staying up there. But when zip red dives 50, 60, 70 points, and you're obviously on the green line, you're obviously in a red spike as well, but you have zip green at 0. And so your buyers have left or are significantly leaving the market. Over here on the pink line, you do not have your buyers leaving the market. You're in a downtrend. Some of them are riding it out, but your zip green is at 38, not at 0. And so there's no real strong ability. How do I say this? There's no I can't say there's no desire. It's not there. You can recognize the power in the indicators, and you can see it, but you need to understand it. And when zip green is at 38, people aren't necessarily leaving the market. And so is there more room to leave the market? I would say absolutely yes at this point, because on the pink vertical line, your power yellow has crossed under 0 and it's been heading down for the last several days. And when it goes down under 0 versus bouncing off it, like on the green vertical line over here, you're in for more down steps. And so that's, in a way, that's how you will see this difference. You pick it up here between the green and the pink. You pick it up on the trend chart when trend gray is down and lowest, and again it bounces back up. It's lowest. Trend gray is lowest. That's the difference. All three red, green, gray are under the other trio lines, the blue, pink, and yellow. Over here, look at the pink line over here. We've got the gray is not at the bottom. Red is now at the bottom. You do have in the red line, you have a TOC pattern that says it's going to bounce back up because it's got a longer lower tail. but there's too much evidence that says you can't necessarily trust that particular one indicator of a next day up. There's too many other things that are not there, and especially the fact that everything is underneath. Your fast lines are all underneath your trio lines, and it may be that the trend trio goes down to 0. At this point, you just don't know. There, now, on the yellow line, if you remember when I've made the comment that, like for example, down here, I've made the comment about the pink-green bottom or pink-green top. When the pink-green line is real low, like you've got a pink-green bottom, and the pink line is under 1 and it's going low, and then there's signals that'll tell you it's going to bounce back up, and I'm not going to go into those right now, but what I'm trying to say here is that right now on the yellow vertical line, you have a zip pink that has stuck its nose out from underneath the zip yellow and blue and gray lines, and that usually is indicative of a next day down. Okay, now why didn't that go down? You oftentimes have the zip red up there with those at the same time, but you need to look more in depth when you have these things, because if you notice, the zip yellow and blue have been running strongly real high, and they're continuing to do that, and that's indicative of an uptrend. When it runs down, when zip yellow and blue are running down low, like under 10, bouncing back and forth, you're in a downtrend. But what significant things that will tell you about what's happening here is, for example, you're in your swing pink, you're in a TOC pattern, a 2-day TOC pattern at the bottom, and it's not really that of an important factor, except that the pink is down touching the 0 line. And so it's kind of like a bounce back up pattern. Your zip red is in a high right leg W, and so that's telling you that it's going to go up next day. And if you look continuing on over on the trend chart on the yellow vertical line, your trend gray is actually real high above your red and green, which is oftentimes a continuation of an uptrend. But more importantly, trend red is above green, which signifies an uptrend, and they are almost above, or the red is at least above the trio, blue, pink, and yellow. And then down in the power chart, you have the power yellow running high. It's been doing that for several days. Again, the formula for being highest is that it needs to be that the power yellow and the zip yellow both need to be highest, and both need to be going down. And you can see that between the yellow and the green lines, it was the last day that the zip yellow finally went down, and on the power yellow chart, you had a couple days down before it got to the green line. But all that being said, these differences that you see are differences in how you can identify with different situations in how things are going up or going down, just by looking at the indicators. Right here, where the line is on between the green and the pink vertical lines, we have Zip Zion is lowest, and we can identify that, we can identify with what that means. When Zip Zion is lowest and going up, you're in an uptrend. So you could have, after this close the following day, you could have picked up 2 nice days of going up in an uptrend. All the rest of your indicators are above the 50 line in the zip chart. One other thing that I want to comment too here is that you can see this stuff happening in the swing gray line. If you're over at the pink line, you can obviously see that zip yellow and power yellow are both going down, and yellow, of course, is crossed under there. But look at your swing line, which is your swing gray line, which is your deep cycle indicator. It's been up and up and up and up. It's been high above zero for many, many weeks. And it's been, going up, going down. But now, because you have this peak right here and this peak right here, and by that what I mean, I'll expand this a little bit, you have a lower high, which is the definition of a downtrend. When you have one peak that's high and it goes down and comes back up, but it can't get high enough equal to what's been happening over here, because it's generally been running over here. It tries to go back up, doesn't make it. It's hit a downturn. So you can see that things are going to go down from here. And then on the pink vertical line day, that is a good indication, and that tells you that things are going to continue down. So that's just another example. But one of the, as I mentioned to you before, and I think I emphasized it enough, and that is the zip green was not at zero. So even though you saw this initially, you may have said that this qualifies in the price chart on the vertical pink line day, with the blue at 11, the red at 16, and the green at 35. The red and the blue are closer together than the red and the green. The red times 2, 16 times 2 is less than the 35. It qualifies as, hey, this might go up next day. But those are the two ideas behind the signals on the price chart. You have the price red lowest, under blue, obviously under green, and then when you have the red times 2 is less than the green, those are your two primary signals that you can say things are going to go up the next day. Obviously, it doesn't happen all the time, and I pointed that out in this video, but it is great to have that power to see what's going to happen. And it's just a matter of getting the experience to identify how you can also tell how these leading indicators will identify what's going on. It's that procedure power that we have in the daily analysis of different examples or different stocks that allow us to build our knowledge and to develop our ability to recognize when something will go up more strongly than another opportunity. So it's exciting. I can't help but say that we have been amazed at how pieces have fallen together in this system and complement one another. But it all started with those sensitive indicators that were built many years ago.